Hello, good morning, good afternoon rather. Hi, good afternoon. There are some more seats down here at the front if those coming at the back would like to join us. Hi there, so I'm Natalie Milson, ICC United Kingdom. I'm Commercial Director here, and welcome to our first Masterclass on trade finance, all on sanctions. We're going to be starting off today shortly, but just before I do, I just wanted to have a few thank yous to those that have helped put this event on for us. For those of you that know us already, we used to do these masterclasses quite often in the past. We had a couple of years gap, and now they're back. So we are going to keep them on the agenda. If you've got any ideas for future events, please talk to me or any member of the ICC United Kingdom team. We'd really like to hear from you to know that we're sort of covering the right subjects. I'd like to invite Chris Moore, who's partner at Cleary Gottlieb, to the podium, just to say a few welcome. Cleary have kindly hosted us today, so thanks very much.
Good afternoon and welcome. My name is Christopher Moore. I'm a partner here at Cleary Gottlieb, based in this office in London, and it's my pleasure to welcome you all here. I am the co-head of the firm's global international arbitration practice, and in that capacity, I've had the great pleasure of working quite a bit with the ICC, both as a practitioner in connection with ICC arbitrations, but also as a member of the ICC UK Committee on Arbitration and Dispute Resolution. So welcome today. It's great to see such a full house for today's agenda. Our firm has over 1,000 lawyers across 16 different offices, and we advise clients on a broad range of international commercial transactions from the very beginning of negotiating finance arrangements and commercial contracts at the outset of the transaction all the way through to the end when things may go awry and result in arbitration or litigation. And more often, we're seeing each and every one of our practice areas and across a wide variety of sectors, sanctions having a real impact on what we do and the advice that we give to our clients. I spend a significant portion of my calendar advising clients in connection with the impact of sanctions on contracts that involved Russian parties related to sanctions, EU sanctions, US sanctions, UK sanctions, and the like, in light of sanctions imposed following the invasion of Ukraine. Sam Chang, who's here today, will be from Cleary's DC office, will be speaking on one of the panels that advises clients in connection with issues arising in Venezuela. And we're continuing to get questions from clients about risks related to potential sanctions related to China and what the world might look like in that scenario. If there's one common theme across all of these issues, it's that the sanctions landscape is very fluid. It evolves very quickly. And the decisions that we advise our clients on rarely are based on bright line rules. They often turn more on sound judgment and weighing risks between deciding to move forward with the transaction or not. And that is, of course, why we are all today. We have a terrific group of speakers who will enlighten us on a number of these topics and hopefully provide us with some guidance as to how to address these complicated issues. So without further ado, I will hand it over to the...
Thanks, Chris. Before we start, and I introduce Dave Mainu, who you can see is or isn't on the screen. So Dave, hope you can hear us and you'll turn your screen on so we can see your face. Welcome. If you don't know the ICC, we are the leading industry institution that feeds into policy work at both the UN, WTO, and big international policy forums. Trade finance banking is one of many commissions that we have at a global stage. We have various committees covering things from taxation, arbitration that Chris has already mentioned, and across sectoral as well. So we have corporate members, law firm members, trade finance banking members too. If you want to find out a bit more about us, because you haven't been to one of our events before and you haven't been engaged in the past, please again do speak to myself or one of the team. We've got a trade finance program that you'll see a QR code during the breaks. You can just scan that and learn all about what we're doing around digital trade, sanctions, fraud, KYC, and you can come to myself if you want to know more. Dave Maynell has helped put this agenda together, and Dave wanted to be here in person, but unfortunately couldn't make it. And I'll let him sort of explain why. But he's our senior technical advisor at the commission level. So when I say commission level, I mean at our head office in Paris. He's been working with us for a number of years now, and has actually just taken over as chair of our trade finance committee. So Dave, over to you.
Thanks, Natalie. Welcome to everybody. And my apologies for not being here in person. I promised to make the next masterclass that we had. It was unavoidable this time. This masterclass is basically designed to equip participants with the knowledge, the strategies and the practical insights that you need to navigate the complexities of sanctions in the realm of trade finance in an efficient manner. This isn't new. I mean, if any of you know the history of this sort of stuff, it's been around for a long time. In fact, the concept of trade sanctions can be traced right back to ancient times. Although not as formally structured or globally enforced as they are today, sanctions play significant roles in diplomacy, warfare, and economic strategies among states and civilizations. In fact, one of the earliest recorded examples that I could find of trade sanctions is the Athenian embargo against Megara in 432 BC. This was known as the Megarian Decree. So it was imposed shortly before the Peloponnesian War, and the embargo actually forbade Megarian merchants from accessing markets and ports within the Athenian Empire. And then in the 3rd century BC, we look at Rome. Rome imposed various economic sanctions on Carthage, including restrictions on trade, limitations on naval capabilities, and demands for war reparations. Some of these may sound familiar today. These sanctions were part of Rome's broader strategy to weaken Carthage economically and militarily. And even back then, we could look outside Europe. In the 2nd century BC, the Han dynasty of China implemented economic strategies against the Xiongnu, which were a nomadic confederation considered a significant threat to Chinese borders. And by establishing fortified outposts and blockades, the Han dynasty aimed to restrict the access to vital trade routes and resources, particularly along the Silk Road. And this strategy was part of a broader military and diplomatic effort to protect the empire's frontiers and stabilise the region. So it's apparent sanctions have long been a tool for centuries for many countries, particularly those with significant economic and political influence, to exert pressure on other nations, other entities or individuals to change their behaviour or policies. So on that note, I'll hand back to Natalie to commence proceedings. Enjoy the speakers.
Thanks, Dave. Thanks for the history lesson on that. I'm presuming you weren't around at that point, but thanks very much for the insights. Without further ado, I'd like to introduce Graham. Graham Bright is the Head of Compliance and Operations at Euro Exim Bank. Dave, would you like to come up? I'm sorry, Graham.
Thank you. Yeah, thank you. So good afternoon, everybody. Come on, it's already late in the afternoon, so this is the witching hour almost. It's 3 o'clock, 3:30. The subject is quite big. As you can see, history, the 2,500 years of problems with sanctions in trade has not gone away. We're still living with almost exactly the same thing. But what tools, what problems, what challenges are still there as far as trade is concerned? So first of all, my name's Dr. Graham Bright, and say I'm Head of Compliance and Operations at Euro Exim Bank. And it is truly an honour and a privilege to be asked to present the first presentation of the afternoon. International trade is the lifeblood of the global economy. It keeps approximately $25 trillion worth of trade moving around the globe in any particular time. The panel after me will obviously say, no, it's much more than that. But this is the sort of extent of monies involved flowing around the global economy. The global trading system, though, is facing many, many challenges. Escalating conflicts, geopolitical tensions, fragmentation in industrial policy, leading to lower growth, ships avoiding the Red Sea, an impact on agriculture with climate change. Any country unable to feed itself is in a real problem at the moment. Today, also the trade gaps, the differential between import and export between very many countries worldwide, $2.5 trillion worth of trade gap. And the bank I represent, who are based in St. Lucia, a small island in the Caribbean, are facing exactly that problem. The level of imports far exceeding the level of export at the moment. So the balancing of that is absolutely critical to economies in that particular region. Why is it a problem? Lack of liquidity, cost of foreign exchange, bureaucracy in the whole of the trade process, complicated parties in the whole of the ecosystem, late payments, fraud, structural problems, and basically corruption. In a world where fraud, corruption, deception, and criminal involvement is growing, the delicate balance of nature, geopolitical stability, availability of funds, disregard for the rule of law as well, means and the intent to pay are constantly the threats we have to guard against. Last year, almost 3,000 trade restrictions were imposed, and more are expected. Trade regulation is also growing at an alarming rate, stifling growth and entrepreneurial flair, slowing down investment, suppressing the ability and supporting of legitimate cross-border transactions. We want cross-border transactions. We want them done the right way. In addition, foreign direct investment is now increasingly driven by geopolitical preference rather than business fundamentals. The complex structure of sanctions and volumes of tariffs is increasingly encouraging more imports from countries like Vietnam and Mexico than traditional powerhouses of China, often through sanction-busting corridors. But we'll talk more on that later. Food security, vitally important. Dependency on commodities, transitioning to green initiatives will also have to be factored into future trades and looking at the potential cost and logistics that brings to us. So what can we do? Before I look at the slide presentation, a number of key points. Promoting trade and openness, collaboration with all the people within the infrastructure and ecosystem of trade, the life cycle, vitally important, and was mentioned before from our legal experts. Understanding the impact of a subsidy, understanding the impact of a tariff. We look to use digitization, improving the way that documents flow, the understanding of the whole mechanism of that, and also what individual countries are prepared to do and need to do to safeguard their home businesses and to work productively and getting hold of decent supply chains to make them economic for the future. Countries are no longer self-sufficient. No country is able to support every industry sector to keep itself running in the way it was potentially in the past. Even China today was 95% self-sufficient in food. Today, that is 65%. The volume of imports have dramatically increased for foodstuffs. Diets change. The whole way of working has changed. So all organizations, whatever size, including us, small Euro-Exim Bank, are forced to take even more investigations and huge investment in order to look at technology to protect our people, our company, our local jurisdictions, and our position in the global economy. And whilst embargoes and tariffs are also powerful tools, let's look a little bit more now at the way that sanctions are working internationally. A little bit about us. We are currently now, from a starting position of 8 years ago, with 40,000 people in over 200 countries. And here again, you might say, well, that's terrific news. But in the big scheme, that's terrible news. Because of course, we now have to look at every single country, the way it operates, what are its sanctions, what is its international position, what are they doing from an import-export point of view. So let's move on from that, that's the company. But why are there sanctions in place? What is the key point about sanctions are so important to the whole economy? Well, first of all, that diplomatic pressure, obviously, targeted entities, targeted nations. the basics, why we were to look at sanctions in the first place, but to restrict certain types of activity as well. And what forms of sanctions are there? Well, certainly, first of all, diplomatic, as we saw yesterday with the UK and China, looking at the expelling and looking at people at embassies and throwing out diplomats. Well, that's all very well and good. Does that make sure your food supply is any better than it was in the past? Economic ones, these are the ones which really tend to bite much more. If you restrict food import, for example, then you grasp that nation firmly by the neck. That has a much finer impact than looking at an individual who may have an asset freeze or a bank account being taken away or suspended for a certain time. Well aware of things like travel restrictions as well. That's great. Stop people physically moving around. Does that stop international fraud, corruption, etc.? Not as much as perhaps an economic ban. And sports, very good. We're coming up to the Olympics, and let's see what happens when people are restricted from being there. They don't represent their own country. They become independent. Is that really the sanction which is going to help countries to move forward and to be good citizens on the international stage? How do we impact? What are we really doing with sanctions? What's the real impact here? We deny investment is probably the principal way of getting the attention of countries to do things the right way, to do things morally, to do things ethically, and by raising cost of capital, make it difficult to do trade. However, we need to also look at which countries are looking at a policy of protectionism, isolationism, and nationalism. Some do not want to open their borders. Some want to be very domestic in their outlook. So it's really important that we understand where those controls are going to be placed, how they're going to be placed, and what the maximum impact is going to be. But of course, there are a number of areas which are very key to sanctions and why they're put in place. And the first one of those, I'll just move back one. There should be another slide there. Human rights, certainly human rights violations. We want to make sure that people do act as actual nations the right way. No exploitation of children, looking at torture and using the judiciary system in an incorrect way according to the way we would like things to work. Certainly to curb nuclear proliferation. Many nations where you see those very large numbers there on the left and right-hand side of the screen there are something like 5,000 warheads which are owned by the US, and the same for America and Russia as well. They don't want things to get out of control and want to control much more those nations which could cause problems. So of course they're impacting with sanctions on the materials which are used to build those types of weapons. And one main one as well, terrorism financing. We're well aware in the international market conflicts currently. We want to make sure that sanctions are in place to prevent the movement of funds, the storing of funds, and the distribution of funds to make terror financing even possible. That's a very, very tall order, but it's one which is very much on the watch list of almost every country who are implementing sanctions currently. But sanctions, all well and good, the word sanctions is fine, but there are degrees of sanctions as well. And important to understand what type of sanction is impacted as to where. So we have very, very targeted measures as opposed to extremely wide measures. And a country may have a very specific one that looks at people as opposed to one which is an economic ban on certain types of activity. So a company could be banned, an individual could be banned, their assets could be banned, etc. So we need to know, again, what is the position regarding sanctions overall and the extent of those sanctions as well. And to give you an idea of the complexity, as was alluded right at the beginning in the introduction, it's worth remembering that individual countries do not always follow the same procedure or the same rules as any other. And when you look at the type of problems here, this is exactly why we're trying to track so heavily what's happening on the international markets. So every country could be different. Remember, the UN list is looking at 700 people and looks at the entity as opposed to the country. How can we make sure that that very, very wealthy person is actually supporting a regime. We want that to stop. We want to make sure that, say, a country doesn't do a particular activity. We don't want to get them hold of certain goods, etc. And as you'll see from the list, and especially on the right-hand side, talking about EU sanctions, 33 countries. Well, not blanket sanctions, but very, very defined, very unique. And each country, when they come together, don't always follow the same process. For the UK, we currently have sanctions on 24 countries. We have it on many other people, but we also have these asset freezes, travel bans, targeted things in place as well. And our challenge is always to find the right way to ensure we can get hold of the information to protect ourselves for every part of the transaction, from the first interaction with an applicant all the way through to reconciliation and settlement at the end of a very complex trade. So what sort of goods are involved in the whole thing? Why is this so important? Well, first of all, looking at the sort of goods, many, many more electronic goods. You see, most of the sanctions are not so much involved in foodstuffs, because economies should be allowed to feed their people, but it's very much about the electronics and how those are implemented into other goods as well. The raw materials of manufacture and how that impacts generally. But also, many have now self-imposed sanctions. So like those, we see that individual companies have decided we will pull out of that. We don't like the way things are working, let's pull out of that scenario. We're not willing to support that particular economy. So Nestle, IKEA, Mondelez, etc., large companies, international, and they've been put under pressure to ensure that they do not support regimes which their governments are not happy with. Also, from our perspective, our regulator has said that we will do no business whatsoever with Russia and Belarus. That's quite perhaps unusual. We're following very much the stance from the US because of our positioning in the Caribbean, but also on an individual level, we have taken the stance that we will impose our own sanctions regarding any activity for an applicant, a beneficiary, goods, etc., completely stopped. And that will remain the condition until we are advised otherwise and take other advice. But of course, there's another problem, that once you impose sanctions, people want to get round them. And the way to do that is a sanction busting corridor. We've seen it with oil coming from Russia to Sicily to a refinery where it is rebadged and becomes an Italian effective good, which is then exported to the United States. But that seems to be okay. So we need to be aware of who is my customer, who is my customer's customer, who is my supplier, who is my supplier's supplier. So that's all part of the investigation we need to do overall. Moving on, something I didn't realize quite as much from the volume that was going on, from the number of sanctioned countries, this is the amount that the UK has been doing in trade with those countries. Quite surprising. I thought originally sanctions meant we didn't do any trade with them. But no, look at the sort of numbers that are involved in the whole process. So whilst we think of, again, sanction as blocking everything for a particular country, it is not so. Trade still goes on. And if you were to cut out that amount of trade, that's a very hefty chunk of export from the United Kingdom. For example, now look at it from an international perspective, what could be the whole of the impact if every country did the same. Cool. Excuse me, of course. Export controls, which countries, where do we do business? Do we want to do business there? We have to, as a company, take a very informed view as to where our focus needs to be. All of the slides will be available afterwards. If you're trying to scribble and take notes, please don't. They'll all be there afterwards. And I apologize if it's going quite quickly, but from a time perspective, we have to do that. Our sanctions regimes, you can see where we are, the UN. There are concentrations. A lot of our business is Africa. A lot of it is Asia, India. We do almost no business in the European region at all, but South America. Principally because of where we're based in the Caribbean, That's not our island there, but it's very, very close to that. But then looking at specifically for Russia, look at the specific case for Russia. Each of the countries around it, and look at some of the impact of the sanctions which they've been put in place. So it's quite possible to do business with Russia if you're in a certain country, with certain goods, with types of services. However, what we have found is that there are very, very specific sanctions against individuals, and this is very much to do with Russia at this point. The asset freeze and the travel bans, and certainly Mr. Putin, Lavrov, Abramovich. So there are specific ones for as far as the individuals concerned. Asset freezes against political parties, against the military, against defense, against media organizations as well. From a finance perspective, certainly SWIFT, for example, has banned 10 Russian banks, but they've said, we don't care, we'll make our own SWIFT version instead. Certainly ban on provision of crypto and the way that's working there, and access to certain services. And then from a transport point of view, closure of airspace, not allowing certain landings of certain aircraft in certain places, maritime transport, using of oil and the use of oil in the aerospace industry. From an energy point of view, we know about Gazprom and companies like that. Certainly a ban of all imports of all oil and coal from Russia. So again, very, very targeted sanction which is taking place, yet from many countries they say, no, that's okay. And in fact, India is still getting more business with Russia than ever before. Ban on new investments in Russian energy and the mining sector. We look at the defense, obviously, which is one of the key ones where sanctions need to be in place, and a very, very heavy program for many, many countries, looking at the provision of services for the defense industry. Certain raw materials, steel, iron, cement, asphalt, really around the construction industry as well, stopping rebuilding of certain parts of the country. So it's all really kicking off with a number of very, very targeted sanctions we have to look at almost on a daily basis. That's the problem here. And from a professional services point of view, you are not allowed to provide any legal, accounting, technology, consulting services into that region. For media, there's certain restrictions there. Companies are involved in that. And also from the point of diplomats and visas, certainly going to be very difficult to go there if you've never been there, which is a shame because it is a wondrous country. We've been at the right time. So it's just a shame that we can't actually visit there any longer. But the important one here is that last point, no longer invited to the G8 meetings either. So there seem to be more as international pariahs rather than international partners. So what do we need to do? And that's something the panels are going to be covering as well. To make sure you safeguard, you monitor, you train, and you are vigilant. That's the key point. Look at everything, data collection, how you're doing that. Where is it coming from? Don't rely on one source. Where's your watch lists as well? Name matching, using fuzzy logic, using the technology to ensure that you have the right data to make informed decisions. And risk scoring as well. Because if it ever comes to a legal case, you will be required to show what you have done to make sure you've safeguarded everybody in the whole process. And finally, investigation, compliance, making sure those people are there. It is a huge investment. Of the people in our company, between 20 and 30% are involved in the compliance process. Get it right the first time, do things right, and do the right thing. That's how we try to instill AML and really checking individuals, companies, process, product, timing, placement, all of those things into that particular process, helping that certain commitment process for every single trade. And also drawing on collective experience. And finally, just to mention that we work with the ICC. There is a wealth of knowledge, experience, and people to assist you to help to make that decision process easier. And we ensure that everybody does training and also draws on that experience in a much bigger way. And we open as an organization, if anybody wants to contact us to have our views on these sort of things, but we are very pleased and open and welcome any such approach as well. From our perspective, I appreciate the time. I look forward to the panels moving forward. Thank you for your attention. I apologize as a very quick whistle-stop tour through what Sanctions are doing at the moment. And again, thank you so much for your kind attention and the opportunity to speak with you this afternoon. Thank you.